Marcel Williams here with Elliott Wave Source, number one source for Elliott Wave technical analysis. Today is November 6, 2013, and today I'll be going over a couple of pairs and starting out with the dollar yen. Now, dollar yen has recently come upon some support in the form of an ascending trend line, and as you can see, it also broke above this resistance level as well. And then it kind of came back below, so pair looks primed for longs at this moment. And within the count, we see that we have this as 1, 2, so we're currently working on that third wave. Now wave 2 retraced slightly beyond that 76.4% mark, so with wave 4 we should anticipate that being just at that 23.6 mark, and that would violate wave 1. So this wave is looking like it would be in the form of an extension. So anticipating this wave to break above that 100 mark and push as high as 100.8. And also, if we just jump on the hourly charts, see that we have been stuck in a corrective phase. We had that wave, larger wave A down, and currently working on that larger wave B. Now within that larger wave B, we see that we had the A, then that complex B wave, and then now we're working on the C. And then if we just take a look at the A, let's try to get a target for wave C. See that initial targets is set at 101.5, as that would be a 61.8% relationship with wave A. So that puts our target at 101.5. So can definitely look to enter this pair long at this point, as it's finding trendline support. And we can put our stop losses below that. So look to enter at this price, 98.5, with stop loss at about 98.1, 98.0. We can even put a 60 pip stop loss on that, and then we will be looking for a break above 100 in this. So the 100.2 be a good area to put our targets at for this pair to make it very attractive. Another pair I want to look at that hasn't really moved yet, but definitely think it could break out, is the Aussie dollar. Now with the Aussie dollar, see that we had that 5-wave count upwards, and definitely anticipated that this is a wave. This move downwards is an A wave, and then we're anticipating that the move upwards will be the B wave. Now, don't like trading B waves unless they look very attractive, and at this point it looks somewhat attractive in that we will have a good stop loss on it. The break up below this ascending trend line will just signal for us to get out, as we could see it push much lower towards this ascending trend line right here, which would be at 94.3. So it could push much lower. Right now it's at 95.1. So good area to get long, put a 30 pip stop on that, and then if prices break below and you get stopped out, just look for re-entries at around 94.2, 94.3. And definitely looking for a 61.8% correction on this. So targets for this is set at 90.962. So look to go along there, and then about a 100 pip run up, and you'd be only risking 30 pips. So pretty good risk to reward ratio. Then I just want to touch on the pound and then the euro. Let's just start out with the pound. Now initially we entered this pair long, did the chart of the day on this for Monday. So we got in long, and then prices did hit our targets at 106.3. As we see, it broke above that 38.2% mark. Now in the beginning of the week we were looking at this, and our overall bias is to the downside in this, but we definitely thought that we would either see a bounce off that 38.2 mark, or if not, then we could see it off that 61.8% correction, which is represented by this red fib. So we definitely see that it broke above that trend line resistance. So now our next level for this is at that level I just stated. So you can look for shorts at 61.2. And for those that have been following us closely, you saw that we also said we wanted to build into this position. So we wanted to build it at each one of these Fibonacci levels. So quarter of the position here, a quarter here, and then that final half right here, with a good place to put a stop would be at 61.6 or 61.8. So break above that 76.4% retracement level. So definitely look to enter this pair short, and for you guys that have not jumped in as yet with those other positions, the quarter positions, you can definitely look to just enter that full position there, and then the stops would be at 61.8, so that would be a 60 pip stop. And then we definitely would be looking for this pair to push down significantly lower, maybe towards 155. Then finally, last pair I want to touch on is the euro. And with the euro, see that we had waves 1 through 3 completed, and this pair has not taken off as yet. As we see with the pound has shot significantly higher, but the euro has just been hanging around. So it's still, we had entered it long at 134.5, so we're still in good shape, and I still like this pair higher. So what I would do is just tighten up stops and just put it right below this horizontal trend line. So we'll put it around 134.3. So it'll be a 20 pip, risk it 20 pips, and then we're looking for a move towards this descending trend line. And we take a look to see what Fibonacci retracement that would be. That would be a 61.8% correction. So 36.8. So look for that level, and that would be over a 200 pip run up. So 4 pairs we definitely have on our radar, and we're anticipating moves throughout the rest of the week. So thanks for watching today's video. Any questions or comments, definitely feel free to jump in the chat room. Paul or myself will gladly assist you with anything that may come up. So for you guys trading, enjoy the rest of your week trading, and good luck.